Hello traders, today I want to show you how you can analyze a chart with just simple moving averages and an stochastic and MACD, and how I look at the chart in a multi-time frame fractal way to find the best entry point. Stay with me up to the end of this video and I'll show you exactly how I trade, and you can pinpoint the entry with 90 to 95% win rate accuracy. Okay, what we need today, I normally use simple MACD and simple stochastic, nothing fancy. As you can see, this is the example. All right, this is the standard MACD, right? So let me change the colors so you can see it in the chart. Red. This is the MACD, and stochastic is the same, just the levels. Let me check. Yeah, okay. This is a stochastic MACD. Let's have some moving averages as well. What I use, because I trade in a 1 minute chart, I want to see the higher time frames. So normally 15 minute and 1 hour and 4 hour time frames. These are the higher time frame that I look at to find the trend. So I'm gonna have one at 15. I'll put it at red, exponential, and median price. I want to see the middle of the candle. That's the first one. The second one is 1 hour, which is 60. I put it in blue, a little bit thicker. And the other one is 240, which is the 4 hour time frame. I'll put it at the thickest, and let's make it green, lime. Okay, now we have 3 moving averages. This one shows the 4 hour time frame, 1 hour time frame, and 15 minute. I am at the 1 hour level. These indicators now show a higher time frame. Okay, the 241 hour candles make this 2 hour for 240. But when I go to the 1 minute chart, this green one shows the 4 hour chart. Okay, if you've watched my previous videos, you know I always say start with the beginning of the trend and end with the end of the trend. You know, you have to know where the trend begins. As you can see, we have flow of the chart. If we consider this green moving average, the 240 moving average, kind of the higher time frame or higher trend, whenever it starts going up, we can consider the trend uptrend. So as you can see, we have a double bottom down here. This double bottom shows that the market is kind of stopped here, and the downtrend that was here, and it started to going up. So what I do, I normally mark the beginning of the trend, which is here. From this point, the market started going up. So the trend hasn't ended yet. The trend is up there. So we still consider this an uptrend. The previous trend is important as well. So this is the beginning of the previous trend. Up here, the beginning of the new trend and the end of the previous trend. These two things we needed. That's why we marked it. Alright, the next thing that we do is we connect the highs and lows. If you like something like that, okay. So I'm gonna mark it with my indicator so we can keep it in the lower time frames. But that's how I want you to do. Normal highs and lows, not the small ones. We are in a higher time frame. This is a 1 hour chart. This is probably the past 2 months, 1 month of the chart. So I get this indicator. This is a multi-line. It's called multi-line indicator. So if I keep the control key on my keyboard, I can connect all these highs and lows. So you keep going like that This is based on the trader's eyes, okay? Every trader is different. I see the major ones. Some traders are very detail oriented, so they see the smaller higher time frame and the smaller highs and lows. But that's how I see the market. Okay, now that we are here, as you can see, we have different highs and lows. One is there. These are the main ones in this current trend, and that's the main bottom that we have, the last low of the market. If we can connect all these, that's going to be a very beautiful support line. Now let me delete all these and get a trend line, and we connect all these. So at this point, the market broke this line, came back to it, and then started going up. I consider this low point the best point for trade, the pullback. Some people just, whenever the price breaks through a trend line or a resistance line, they start their trade. I wait until the price comes back or gets close at this, like here. You see, the price got close to the line that it broke, this resistance line. I trade the pullbacks. Some people trade the breakout. The breakouts, the problem with the breakout is that most of the time it works. Sometimes you face like they call it a fakie. It's a fake breakout and it hits your stop loss. But if you wait for the pullback, your trade accuracy goes much higher. Now we're gonna start the actual trend lines. I'm gonna draw it with this arrow line so you can see differently. From the last low, which is here, I draw another one to the next low, and then I keep going there. As you can see here, the price broke the trend line, this fan line, came back up. Probably it's gonna go down again. That's what happens normally in like 85-90% of the time, but sometimes it keeps going up. So we don't know, we just wait and watch. So we have a resistance area at the top and we wait to see what happens. This is all we need at the higher time frame. Now we're gonna go to the lower one. If you watch my previous videos, I always say your lower time frame is 10 to 20 times smaller than the current time frame. I go by the 4 times smaller as a kind of a mid time frame, and then my trading time frame is going to be another 4 times smaller, which is 16 times. So if I'm at the 1 hour chart and I see an area that I want to trade, I'll go to the 15-minute chart as my mid time frame, and I go to the 4-minute chart for trading. Actual time trading happens in the 4-minute chart, or 5-minute if you have MetaTrader 4 or other program that doesn't have a 4-minute chart. But yeah, 4 or 5-minute time frame is good. So now we have to find an entry point in the higher time frame. We have our trend lines, we have our resistance line, we have our moving averages. What we want to do is that whenever it depends on your strategy. Whenever the price breaks the trend line or moving average, normally the MACD crosses either with the signal line or with the zero line here. I prefer that MACD crosses the zero line because crossing with the signal line happens too many times. See, here almost crossed. If you were at the live time, here crossed, here crossed. There's so many times got close, crossed again. But crossing at the only zero once here, the MACD stayed up all the way there. We have a little one here, and the MACD stayed low for all this time and then crossed up. When it crosses upward, crosses the zero line upward, I consider the trend uptrend. At least at the current time, it's an uptrend. So when I see that the MACD crosses the zero line upward, I go to stochastic. If there's I wait until the stochastic goes down, at least gets close to the 20 level, the level 20, and then I go to the lower time frame. Up here now we don't have any signal. As you can see, the stochastic is above 50. It's just crossing up and down, left and right, so we cannot decide which way the market is going. So what I do now is that I go to another time frame to find a good entry. So far, the price, what we get from this time frame is that the price is above the moving average of 60, the MACD is above 0, and we are not sure about the stochastic. So we consider the trend going up, the price is going up, and we go to the lower time frame with this idea that we want to find a buy position. We want to get a buy position. Then we go to the mid time frame. As you can see in the mid time frame, the price crossed the MACD crossed the 0 line, and it's been up for so many times. The price here broke the moving average of 60, and then here broke the moving average of 240. Now, as I said, when the MACD crosses above the 0 line, I look at the stochastic, and if a stochastic is close to the 20, because I'm gonna buy, I need the stochastic to be at the low, so in the oversold position, so I'm gonna buy, like here at this area almost. All these lows are signs for me that I can find a good position here. Now I'm gonna mark these to go to the lower time frame. So the first one is, and the second one, when you're trading at the live market is live and you're seeing all these candles forming, whenever the stochastic gets close to 20 or crosses the 20 downward, you have to wait until the candle closes, because stochastic is very, it's just 533, so it's very fast. You have to wait until the candle closes to confirm that the stochastic is closed under 20 or close to 20. This is a 15-minute chart, and as you can see, almost here is the middle of the day. So probably we can consider at this area the London market, and almost at this area the New York market, because this is gold and gold moves very fast in the New York market. So all these ups and downs, the big volatility that you can see is in the New York market. Before that, it's all London market. So I found 4 entry points. The first one is in the Asian session. I normally don't trade, but gold is very good, moving very slowly in the Asian market most of the time. If you're not good at trading gold, probably that's the best time for you. You can go to the Asian market. But I trade almost close to the London session and after the London opens. So the second entry is important for me. So I'm going to delete the first one and the last one. I'm going to keep these two. I'm going to change the color of the second one so I know which is which. Let's put it, that's red. Let's put it green. So the first one is my best time and the second one is my second best time. Now, we go to the 4 times smaller time frame. All right. Remember, our signal, our confirmation is when the MACD crosses above 0, because we're going to buy the market, and we wait until the stochastic goes under or close to 20. Here the MACD crosses above, going upward, and we wait until at this point the stochastic gets close to the 20. Let me mark it. So if I put this line at this stochastic down here. As you can see, we're gonna connect the highs and lows again to see the market. These are the highs and lows. We do the same thing as we did in the higher time frame, no difference. And then here is the New York session that New York opened. Again, we have 3 highs, couple of lows here. If we connect all these, see the same thing happened that happened in the higher time frame. That's why I call it fractal. A price is a fractal, a price chart, because no matter how much you go up higher time frames, no matter how much you go to the lower time frame, you see the same thing. The MACD crosses, the price goes above the moving average, these highs form, the price breaks these resistance lines, the trend lines, comes back to it, and then moves on again. That's why we can take one spot, one best entry at the higher time frame, and zoom in to go to the lower time frame to find the best entry. Now our best entry, as I put it, this line here, this arrow, it's here. Why? Because the MACD crossed above the line, above the 0 line, and the stochastic dropped to almost like 20 here. If you take a trade at this point, let's see how much it is. To the high, it's like 45 pips. And how long did it take? Let me put this in a candlestick form. This is our arrow. From the low of this, I normally wait until it gets almost close to this previous high. But you can get half of your trade here, and then maybe next one goes here. So if you put a line at the previous high, as you can see in the next movement, see the price comes down, crosses this resistance line, goes up and comes back to it. It's a full cycle, and then it starts going up. As you can see, let me clean all these. When the price drops at this area or the next one, because the stochastic is close to 20, especially this one that is dropped under 20, you can take a trade at 2 spots. One, as I put the arrow, is here. The second one above this resistance line. Both of them will give you exact entry point, and when you enter the market, right after that the price start moving upward. The next one, the previous one as well, the price start moving upward. So let's see. The first time was about 45 pips, right? Sorry. Dropped 30 pips, and the high, well, 48 pips. Let's say you can get 30 pips of this in what? 1, 2, 3 candles. The first 3 candles. This is a 4-minute chart, so 12 minutes you got 46 pips. The second one, when the price got to this resistance line which was drawn from the previous high, if you enter at this low or almost at this last candle, the last doji that you see here, it took price, you see the high, let me draw from the high to the low, I draw this box. From this high, we take the trade when the price hits this resistance line, and we close it when the price gets to the previous high. From the bottom of this box to the high of this box. Let's see how much it is. Oh, not this one. From the low to the high. This one is 66, yeah, 65 pips. I'm not saying you enter at this exact position, but when this candle closes, the next candle that is this big green candle, at the opening of that candle you can enter, and at the exact high of the previous high you can exit. So it's 51 pips. Let's say you get 50 pips or 45 pips or 40 pips in, like, this is 20 bars. This is a 4-minute chart, so it's 80 minutes, almost close to 1.5 hour, 1 hour 20 minutes. You can get about 50 pips out of this trade. The previous trade took 12 minutes and you got another 40-45 pips. That's like a 90 pips. I don't know your size, I don't know your capital. You can decide on how much you're gonna risk, and you get a very good trade. This is very fast and this one is a little bit slower. Now, I talked about the target. Target is high, the previous high, or this one, the previous high here. Okay, so the previous high here, you can put your target there. In the second trade, the previous high, you can put your target there. Now, where do you put your stop loss? This is confusing for many traders. I normally put the stop loss at the low, the previous low, which is here or there. For this trade, the reward to risk ratio is not that good. You're gonna get this much for this long. It's not even 1-to-1. But for the next trade, it's very good. Almost this one is like a double than this, the stop loss. So your target is like 2-to-1, your reward to risk. But the previous one is not. So where do you put your first trade stop loss? I prefer that you put it based on the price action, the previous highs and lows. But because this high here is not good, this high is very close to the entry point. Maybe the next candle even moves down and hits your stop loss. That's not good. The previous high is gonna be here. I prefer you to put your stop loss a little bit lower. Maybe you see here, up, down. This low is very good for a stop loss. And as you can see from this point up to up there, it's more than 1-to-1. This is the best way to find your stop loss. Your reward to risk is at least 1.5-to-1, or maybe 2-to-1. I don't want you to go higher. I don't want you to go lower as well. But risk the amount that you can lose. But the thing is that because your entry point is so good and your win rate is so high, maybe you can even have, after you learn a little bit, you practice a little bit, your win rate is going to be above 80, 85, even 90%. So even if your win rate, your reward to risk is 1-to-1, you risk 1 to get 1. Because your win rate is so high, at the end you earn a lot. And I'm sure little by little you learn how to trailing stop and all those kind of things as well. So this is how you find a good entry point in a fractal trading. You start with the higher time frame. We started with the higher time frame, 1 hour time frame. As you can see, it's only in these 2-3 candles. Why we started here? Because in the 1 hour time frame we couldn't find anything actually. Our strategy was whenever the MACD crosses above the 0 line, we need a stochastic. We wait for the stochastic to get close to the 20. In the 1 hour chart, we didn't see that. We went to the lower time frame. It was 15 minutes. In the 15-minute chart, we saw that the MACD crossed above the 0 line and is staying above the 0 line. And the stochastic here got to the close to the 20. At this point, we can go to the lower time frame, to our entry time frame. Let me find it. Okay, here. Again, we're gonna buy the market. Because the MACD is under zero line, we don't buy. We wait until the MACD crosses above again. This is where all the traders just mix it up. You have to wait for the price to form the best entry point. The MACD crosses above the 0 line. we put a line here. Then still we wait until the stochastic gets close to the 20, which is down here. At this area, your first entry point. Second one, next one, which is this green line. You see MACD stochastic is under 0. Under 20 even gets close to 0. You can enter there, or you can, because the MACD is going down, you can wait. You can wait for the second one until the MACD crosses above the 0 line again, which is up there. And then you come again when the stochastic gets close to the 20, which is down here. You enter again. At this point, 38 pips. The whole movement, as we measured it, was 65 pips. You can get only 1, 2, 3, 4, maybe 5 candles, which is 20 minutes. You can get another entry, 30 pips. Or you can get the whole movement, which is about 55, 60 pips. This is how you find the best entry point. You follow one strategy, you take it from the higher time frame, you pinpoint your entry, you go to the lower one and then the trading time frame, and then you wait until you find the same entry point. Your same strategy must work in the higher, mid, and lower time frames. So you go to the higher time frames whenever you see this entry point. Your strategy gives you a good point. You take it to the lower time frame and you wait until you get another entry point, and then you enter. And you put your stop loss at the previous low. Your target is at the high, previous high, and then you wait until it works out. You can trail your stop as well if you know how much. Maybe put half of the target, and then if your win rate is above 1 to, if your win rate is above like 85-90%, your risk to reward, or your reward to risk, can be 1 to 1 or 1.5 to 1. You don't need 1 to 5 or something like that. This is how I trade, and I will record some videos of the previous trades I've taken to follow the exact entry points. So watch out for my next video, and I hope you can find some very good trades in this way. Whatever your strategy is, you must need to backtest it as well. Backtest it 50, 100 times to find the win rate of your strategy. If your win rate is above 70%, perfect. You keep your win rate, you keep your strategy, and then you follow this multi-time frame fractal analysis. And I hope you have good trades. So wait for me next week. I'm gonna upload another video to show my trades. I hope you enjoyed this video. If you have any questions, please ask in the comment section, and I appreciate it if you subscribe to my channel and hit the like button. And see you in the next video. Bye.